Hello, everybody, and welcome to TradeGate Hub's mid-morning market with myself, Eliman Dambell. And thank you for joining this session. Of course, this is going to be a daily session where we are going to be looking at the opportunities potentially of said trading day. Of course, today is Wednesday, the 12th of May. And guys, what we are going to be doing first and foremost is going through the economic calendar and seeing which opportunities potentially could be created based on today's fundamentals. And before we actually get on to the MT4 platform, let's look at said fundamentals. And guys, today we do have a relatively strong information coming across the board. Of course, earlier on, we saw inflation numbers coming out of Germany as expected, GDP numbers from the UK as well. So we would have seen some opportunity, some volatility in sterling and, of course, euro respectively. And what we are going to be seeing later is inflation numbers coming out of the US as well. So for those of you looking at the dollar, looking at, of course, euro, looking at sterling, but also some of the indices for these respective countries could see some opportunities derived from these potential markets. And guys, of course, these are the highly important, rather, I should say, pieces of economic data that come out today. Of course, depending on the economic calendar that you use, you can essentially filter the system to see which news coming out today could impact you. So, for example, if you go into the medium piece of information, you can see more across the board. But as far as the main data that will affect markets, you're mainly looking at the highly important data there. But guys, so for those of us looking at the markets today, there are a few areas to begin. For me, where I am going to start, of course, is going to be with the indices there in the US S&P 500 or the SPX. And generally, guys, what you are seeing, what we have been seeing with the SPX over the last few days, we have seen some sell-offs. Of course, we've seen a lot of tech-based sell-offs as well. Tesla, which of course joined the SPX, the S&P 500 last year. Yesterday, we saw was also down for a second consecutive day. This time, it was due to data coming out of China, essentially showing that car sales had slowed, I believe, by 27% from March to April. So, of course, not only Tesla, we saw the likes of Apple and a few others, which are included in the FANG group. Of course, we know this stands for Facebook, Apple, Amazon, Netflix, and Google. A lot of these companies were in positions of selling off in the last few days, and essentially that has weighted on the index. And guys, typically what we see, and I am going to get into currencies in a sec. So generally what we are going to do, we are going to look at a basket of different instruments. Just starting off with the S&P, and probably going to have an opportunity to look at some currencies as well, some crypto, and potentially some forex as well. So we will have a clean sweep profits. You can tell it's been a long morning. I can barely get out of a sentence, but we will have a clean sweep of instruments to look at. But going back to the SPX, and I think what would be interesting to see for today, of course, we can see from a technical aspect, the markets have reached or appear to have reached the floor in relation to the RSI. Of course, in pre-market trading, you can see somewhat of a bounce already at that floor, 41.27 now. Of course, the market's trading somewhere around 41.47. It will be interesting to see if this could continue once we see the US Open later this afternoon. Generally, how it's positioned for me, I think there's two things to consider. Of course, you want to continue to look towards this. And guys, again, for those of you watching in each and every single one of the sessions, it has to be made absolutely clear. These sessions aren't here to give you advice. It's just to give you an overview of what's happening in the markets and what could potentially happen throughout the day. Of course, from your own perspective, you need to do your own analysis, your own due diligence to ensure that you find the right trade for yourself. So please ensure that you do take heed of that risk warning also. But going back to the SPX, again, position, we have seen the bounce so far. I think what a lot of traders will be looking at, especially in those shorter term timeframes, is paying attention, firstly to the RSI, but also to the moving averages. Probably if you go further down the time frames, which we'll do in a sec, you'll be able to see how they are currently positioned. Of course, so far in the H4, we have seen that downwards crossover. We saw the upwards momentum, the 10, 25, and 50 EMA essentially crossed over upwards, creating this initial opportunity. But what went up eventually went down. We saw that resistance there. And of course, over the last few days, we have seen quite a lot of red seep through there in the UX index. But again, guys, what goes down eventually has to go up. And typically what we have seen with US indices and indices across the board, but mainly I'd say US indices, once we do have somewhat of a sell-off, mini correction, or whatever you want to call it, we do typically then see somewhat of a rebound. People look at it as a discount, as an opportunity to enter on the low. So there wouldn't be too many surprises if we see throughout the day some rallies there. But I think what would be interesting for you, of course, again, pay attention to the fundamentals, economic calendar. We said this afternoon we are going to have some inflation data, and one of the reasons why there has been some recent panic there in the US, a lot of people are saying, due to the rise in inflation, the Fed may start to consider increasing interest rates earlier than expected. So that's one. Or the first market for today to definitely pay attention to, with, of course, what's coming out later on, but also typically what we know from a technical perspective, how this is positioned. I think a lot of traders, again, will be looking towards this level. But again, for those of you who may not have entered already, what you may see is with typically the RSI, it trades in similar to the in support and resistance areas, and of course we can see there had been a lot of resistance there around 37, around 42. We're currently at 37, so it will be interesting to see if the market is firstly able to get to that level, and secondly, if it is able to break. I think a lot of traders potentially could be looking above that level if it is able to pass that point. But again, it may not be long-lived, because if you look just a bit ahead of that last mini resistance there, you can see 50 as well. That 50 level seems to be some type of ceiling as well. So interesting one to look for definitely today. And I hope if you are trading the SPX or any of the other US indices, Dow Jones, NASDAQ, or whatever it could be, you have some luck in there today. Next up, we need to look at gold. Again, guys, we aren't going to be, market specific. Today we are going to be looking across the board, just to give you each and every day just a daily roundup or a daily preview of what could be happening. Now, looking at gold, of course, has been the beneficiary. Of course, we saw Friday substantially weaker than expected NFP number, non-farm payrolls, jobs day essentially coming in damn near 700,000 less than expected. I believe it came in at 266K after being forecasted at 790 and 89. So we, of course, know typically when we see a strong dollar, this usually means a weak gold. But when we see a weak dollar, this, of course, typically bodes well for gold. We've seen the dollar reach a 2.5 month low against the majority of the G7 currencies. We'll get into that in a sec. But gold benefiting on a weaker NFP this Friday. And of course, since then, let's actually get on to the shorter term time frames just to see how it's currently positioned. So we saw that move Thursday, Friday, essentially leading into where we are now. And guys, again, pay attention to the patterns. We've seen that crossover take place earlier on in the month. That moving average, the 10 and 25 initially, then thereafter the 10 and 25 crossing over that 50. And there you saw it was showing us the potential for a downwards crossover, somewhat of a bear trap. A lot of bears would have potentially been waiting in the wings at that level there, hoping that the markets were gonna drop back towards those 1758 levels. Unfortunately, we saw the opposite. Markets essentially rallied due to those weaker NFP numbers, and of course now, at some stage, it has to run out of gas. At some stage, it has to run out of gas. go into that petrol station, gas station, or whatever you want to call it, and essentially look to find some new momentum. And that's what we are seeing. We are seeing a bit of a break in gold. We are seeing it find its resistance over the last few hours and days. We are seeing it somewhat using that 1841 level as resistance. Again, you can tell. You can tell I haven't had my porridge this morning, ladies and gents. But aside from me not having my porridge, you can see gold at the moment is trading in that $10 range. You can see 1831, 1841. So we are seeing a lot of uncertainty there. I think, again, what could be interesting to see today is there the opportunity for it to break out of this range? Of course, later on in the week as well, Friday, we have retail sales numbers coming out as well. So potentially we may see the markets consolidating until it has further information, further guidance, further statements, further comments that could potentially swing the balance. Of course, if you're looking at it very holistically, you are looking at two types of traders at this stage. Firstly, those who believe the bull run that we saw start, I don't know, Thursday, Friday has come to an end. Moving averages are positioned now for a downwards crossover. Pay attention to that 10-day red or that 10 EMA there, 25.50. It is positioned potentially for that downwards crossover, but as we have seen in the past, just because it's positioned to fall doesn't necessarily mean it will fall. And just to go even further, shorter term time frame, just to see how it's looking in the last few hours. Again, more uncertainty, more inconsistency, or consistency in a sense, because it is trading in that range. I like to call these areas, on a personal note, somewhat of a no-fly zone. It does look very, very unappealing. Generally, you are going to have a lot of traders either doing I don't know, buying, selling, buying at support, selling at resistance, or potentially waiting for breakouts at floor or resistance. For me, I like to see what the charts tell me before deciding. And generally, if you are looking at this, you see, of course, in that recent bounce, it attempted to go back to that 1841 level. But unfortunately, looking at the RSI, you can see 54 at that resistance level, which has been there in the past few weeks or so, or few days or so, has sustained. Now you're looking at the RSI to see what it does. Currently at 46, so it is closer to being oversold and overbought. Of course, we know above 70 is overbought. 30 and below is oversold. Currently at 46, so it's closer to being oversold than anything else. But again, it's a case of where will it go? Has it even found its floor? Are we at support in relation to the volume? Because if you look in the past, going back as early as Monday, you have seen the markets, or even yesterday, I beg your pardon, you have seen the markets use that level as a floor. And if you see where we are now, we are back at that level there as well. So I think a lot of traders potentially are paying attention to this and waiting to see if there are opportunities downwards, potentially taking us to that floor of 1825. Are the markets able to break out of this RSI level? Of course, guys, you can use any indicators you use. For me, I try to keep it simple with just moving averages, RSI, and just very basic indicators, just to paint the picture in a clear way for each and every one of you to understand. So that's gold, another interesting one to look at for today potentially. And of course, as we were saying earlier on, just quickly going back to that economic calendar, we have that announcement coming from the US later on, that core inflation numbers. So it will be interesting. But now what we are going to do, guys, is look at some of the situation here in Europe. Of course, we had data coming out of Germany and the UK respectively earlier on. So it will be interesting to see how those respective markets are faring. And there's no better place to start, of course. I do want to look at the FTSE. The DAX, we may be able to look at the DAX as well, just to see what it is doing today after that announcement. I quickly want to have a look at crypto. So again, just to somewhat be repetitive in the first session, just to give you a glimpse of what we are going to be doing each and every session, is looking at a host of different instruments. Of course, so far we have looked at the the S&P 500 SPX. We've looked at gold. Now we're going to be looking at some forex. Then we are, of course, going to be having a look to see what the crypto side of things are saying. So essentially, these mid-morning updates, mid-morning previews are essentially here. Just to give you an overview of what to expect or what has already happened in that day. Now, as we vaguely mentioned before, cable, and this is an interesting one. This is one I've, on a personal note, I'm going to stay with the daily to begin with before seeping through or going through somewhat the shorter time frames to see how we're looking today. But this is one I've been tracking for a while. And initially, it was showing me two things. I saw a potential opportunity for it to go back to 135. I believe this was probably just earlier on, probably a few weeks ago, 3 or 4 weeks ago. I was potentially targeting this heading to 135. But that changed. That changed mainly through me looking at the RSI and seeing it was just not willing to break past that 45 level. For me, if we just quickly zoom out, sometimes like I always say, you have to zoom out to essentially zoom in, have a look at a wider view, just so you can tell the story to yourself a bit better. And if you are looking at the story here with cable, you can see, of course, as we said earlier on, below 30 is usually oversold, but for the most part, I would say since September of last year, oversold for cable has been around 43. It hasn't reached at that 25, 30 level for a while. Pre-US elections, we haven't seen the markets trade at that low. So for me, when it didn't break that level recently, I started changing my point of view to believe there could be some opportunities there on the upside. But for me, it was mainly above 139, hoping that history could repeat itself and the markets could do here what it essentially did there. And of course, we can see that has happened. And history has repeated itself again, because there we saw a false breakout followed by a large level of selling, and essentially is what we're seeing so far. We haven't seen a large level of selling as of yet, or strength, I should say, from the dollar coming as of yet, but we are seeing some red creep in. So I think for me, the first question I'm asking myself is, are we going to see something similar? History has shown us a lot of bears have lived in this area, but will they essentially come out to play is the question there. Looking at the moving averages, this is one of the indicators which somewhat put me in conflicting views in relation to this, because generally we have only just seen that crossover, especially of the 25 and the 50 EMA. But again, looking at the RSI seems to have reached its resistance there at 67. We're currently at 66.71. So could we potentially have already reached that peak? And even if it does go up, how much higher can it go? And again, that's the long-term view. But for those of us looking at this intraday, I don't know, let's go to a daily just to see how this, an hourly, I beg your pardon, to see how this is positioned. And from an hourly perspective, you can see a lot more uncertainty. Guys, again, this will be the theme across the board when you are looking at markets which have either come out from a strong bull run or a strong bear run. You are typically going to see a lot of uncertainty creep in thereafter, where one of two things happen. Where either those who were early entrants begin to essentially take profit and leave the trade, then you see a second group who are looking at the run, looking at the rally, bullish or bearish, and believing that there are still opportunities and trying to enter on the upwards or downwards. So when the markets would have rallied, some who would have entered around there, I would have been one of them, would have looked to exit somewhere around there. But then you have that second group who would have seen the markets rally over that span of time and believe it's essentially going to continue to go up and buy, not knowing the initial group who created that run would have taken profit, and hence the uncertainty that you see there, the clash between buyers and essential sellers. Now, if you look closely, however, at this time frame, and maybe we may even go to a 30-minute, you can see that downwards crossover there has already taken place. But I think now what a lot of people are doing, again, is waiting. And how would I phrase this, guys? From your own position, from your own perspective, you always want to put yourself in the position of not being reactive. You want to anticipate. You want to wait for confirmation. You want to see what the markets are saying to you, what the technicals are saying to you, and essentially follow them. And for me, what they are saying to me at this stage on a personal level, of course, they could essentially be whispering to you something else. But for me, it's wait. For me, it's wait. There's two things I'm potentially looking for, and again, we have to go back there to a daily. I'm waiting for an opportunity potentially below 141.05. First reason is, of course, history has shown us there's some opportunities below that level. Secondly, paying attention to the RSI, it does look like it is closer to being overbought than oversold. So how higher can it really go? Of course, we can go for the longer term timeframes, but again, this is a daily session, so we do want to just stick to the daily time frame at the max. The signs for me personally, again, for you, this isn't me giving you advice or anything of that nature. There is no advice in these sessions. But for me, it's a case of waiting. Of course, you can just see that rally there, which somewhat isn't a surprise. In the last few hours, of course, the market's hit that floor, and you are seeing history in that sense repeat itself. And we may even see further opportunities on the upside. But for me, the opportunities I wait for are the ones which I believe will be longer lasting. So yes, we could see this even continue back towards that level there, that resistance, which it has held in the last 24 hours or so. But is that really the type of opportunity that would be worth the risk for you? And it may be, absolutely, it may be. But for me, I believe an opportunity like that could potentially be a bit more attractive. So that's cable. Quickly moving on to FTSE. FTSE yesterday, of course, we heard Boris Johnson essentially saying that the UK government is essentially going to do whatever it can to keep and bring back UK jobs post-pandemic. And in the UK, it does seem like we are on the cusp of post-pandemic. We aren't already there. Society, we have seen more than half the population already get a COVID-19 vaccine. We are seeing a lot of social events start to reopen up and things of that nature. And now, of course, it's time for the jobs to come back. And what we are seeing again, and I think we may see this across the board globally with the indices. Now, going back to what we were saying in the US earlier on with the S&P 500. What we're seeing with FTSE and the S&P 500 in particular, of course, we know sometimes this is based on the strength of the currency respectively. Typically when we see, a weaker sterling, this does tend to bode well for the bulls of the FTSE. And when we see a stronger sterling, this tends to put some in the position of seeing more weakness, because of course, especially for foreign investors, it makes it harder or more expensive to be involved in a foreign index just due to the strength of that currency. So what we are seeing here, and of course, you can even look at the correlation in the last few days with cable. We can see the last 2 days when cable was going up, essentially the FTSE was going down. And today we see cable going down. You see some early signs. It's essentially reversed: 2 reds, 1 green, and the other on cable we saw 2 greens, 1 red. So you are seeing the influence of the currency there as well. For me, for me, and you can see this area highlighted yellow. I've been bullish, and I'm going to be bullish FTSE all year. I'm going to be bullish FTSE all year. I was waiting for it to break out of this zone of yellow, and I was involved in a few positions there on the upside. There, as far as today, it will be very, very interesting. Of course, we've already seen that move. We've already seen that huge move take place so far. Again, people anticipating that bounce at support. Again, not only in terms of not only in terms of the market valuation, but also looking at the RSI levels. And of course, from the RSI levels, it did essentially find its way to that floor. And historically, we have seen what has happened thereafter. Now, looking at where we are, we always want to look at the RSI relative to time and relative to history. You are seeing, and this is why we've seen the markets, of course, the wick climbed all the way to that level there, which now we can see is a resistance. And you have seen the market so far start to tail off. A lot of bears live in this area as well. Look at those bears there. So a lot who would have anticipated that initial move are probably already out in relation to the FTSE today. I think for those trading intraday, what they may be looking at next is there an opportunity for it to leave 46? Currently at 43. If it leaves 46, is there that further opportunity on the upside? Could we see a move like this essentially take place there? That could be an interesting one. And again, have a look at the different time frames and paint the respective picture to find your opportunity. But the FTSE it's set up relatively nicely. It's definitely set up nicely. It could be nice. That could be a nice move if it were to happen. But generally speaking, I think again, and across the board, guys, and I think what we are going to be seeing on a daily basis with these morning updates, you are going to see some moves which would have taken place, I don't know, earlier on, and some consolidation prior to the US Open before we see further moves take place. And guys, last but not least, we may not have time for the DAX today, but last but not least, before we leave today, and I hope you have had a great session. I wish these sessions were more interactive so you can ask questions and even give your own contribution as far as which markets you would want us to look at. And we are going to try and look at different markets across the board. We haven't even had a chance to look at crude oil as well. So there's quite a lot. There's quite a lot in which we are going to be able to do together on a daily basis. But as far as Bitcoin, we have been seeing in the crypto side of things in the last few days. Guys, we are seeing a picture. Are you noticing somewhat of a pattern so far? We are seeing a lot of consolidation across the board in a lot of instruments. With crypto, with Bitcoin in particular. Of course, we saw over the weekend Elon Musk hosting Saturday Night Live that had some influence on Dogecoin. They said they were going to name one of the SpaceX rockets Doge. I think it was Doge 1 or something like this. So and also Tesla said they're going to be accepting Dogecoin's payments as well. The reason I'm bringing up Dogecoin to talk about Bitcoin, typically we do see a correlation, and I think that correlation is starting to sway slightly. We are starting to see Bitcoin be a bit more independent from the likes of Ethereum and a few others of those altcoins. But today so far, we are seeing some red come in, and again, it's just typical support and resistance stuff. We are seeing again that RSI unable to breach that 57 level. You are seeing the bears come in, and again, guys, historically in this particular level, 1, 2, 3, 4, and so on and so forth. There has been quite a lot of bear runs which have taken place at that same level. So to have this today, it's not really a surprise. Looking at that doji eye there of uncertainty would have essentially signaled the potential for this rally, false breakout, doji eye turning somewhat into Again, uncertainty, and now we are seeing this red candle seep through. And if you're looking at the moving average as well, pay attention to that red 10-day. Are we going to see this EMA continue downwards? And could we see this potentially heading for 54,919? That does seem to be the floor. And even if you bring that up a little bit, you have some around 55. So could that be a target potentially? The last few times we've seen this move at that level, that's where the markets have ended up. And it does look like it is aligning and heading to that direction. But guys, it's been a great session. Quite a lot to cover, and we will be able to cover more tomorrow. So again, thank you for taking your time out of your mornings to attend this session. We'll be looking forward to seeing you tomorrow. So guys, again, thank you for being on TradeGate Hub. Pay close attention is happening on the platform throughout the day for more opportunities and information. All the best. You take care. Bye-bye.